Alrighty, today's Wednesday the 25th, and the market was a little bit higher here today. Let's take a look at the action here. First, on the daily chart, we're finding the buyers have shown up so far at the volume-weighted average price from the COVID low, and as we know, that's also the 38.2% retracement of that low to the all-time high here in the S&P 500. So, we're seeing signs of stabilization in here, not quite bullishness yet. This is what we had sketched out yesterday, a pullback down towards the 5-day moving average, then a rally up through this level and up towards the month-to-date volume-weighted average price. We're not quite to that month-to-date volume-weighted average price yet, but it does look like it's reasonable, that is, that we could see continuation up towards there. Of course, the primary trend is still lower, and we have to balance that with the overall cautiousness of the downtrend on the bigger time frame, along with the bullishness of the intermediate term time frame here. So if you did get long in here today, I think your worst case stop would go below here, which was the low after the Federal Reserve minutes came out. And what we can do, of course, is put a volume weighted average price on that, and you can see, that level is, today's this little low would be something you might want to protect gains against if you are long. Hopefully you'd taken a little bit off, because we can't trust this market. We still have a lot of earnings reports coming out, and it's been up and down with a general bias to the downside in all of these markets. Nasdaq also continued a little bit higher here today. It's been testing the volume weighted average price all the way back to the 2018 low, December of 2018. That's that purple volume weighted average price. So we've seen a lot of damage inflicted on this market, and the trend is still lower. It doesn't mean it can't continue lower. As we know, all of these markets are in downtrends, and rallies can't be trusted. Now, the 5-day moving average has flattened out as expected, because we got rid of this data here this afternoon. Tomorrow we get rid of this data in the 5-day moving average calculation. So if it's unchanged, the 5-day moving average will be pretty flat. If we're above this level, then it'll be the 5-day moving average will be rising. If we see some further strength in here, maybe a quick pullback even down towards the week to date volume weighted average price, that's that blue line, which is where we find the 5-day moving average. If we were to pull back, I wouldn't buy the pullback, but if it were to start to bounce from there, then perhaps you could purchase it. It would be maybe have the ability to break past this resistance and then head up for a test of the volume weighted average price from the beginning of this month, which had been resistance mid-month here. So that's the potential bullish scenario. The other potential bullish scenario is it just ramps higher, but I would prefer, of course, a pullback and then buy some strength with a worst case stop initially underneath here for a counter trend trade. The bigger trend is still guilty till proven innocent. It's in a primary downtrend. This is a potential bounce scenario, nothing more. I'm not here to call bottoms. I think that people who try to call bottoms, so far no one's really been successful. The Russell 2000, as we know, has found buyers at the prior band of resistance here from 2018, 2019, and 2020. And we're still seeing a little bit of stability in this area, but we've seen stability before in this downtrend. It doesn't mean it has to turn higher. We have a declining 20-day moving average. That's that blue line. The declining 50 right here. The volume weighted average price off of that prior peak in April is just overhead as well, and that's something to be aware of for tomorrow at about 183. On a 15-minute time frame, you can see we're back above the month-to-date volume weighted average price. And again, a worst case stop if you decided to get long would be underneath this level. Ideally, what we see is something more along the lines of, little pullback, starts to, go sideways, rally up, get long somewhere in here with a stop underneath, this low, if it was to create that type of higher low. And we would be looking for the potential that the volume weighted average price off of this peak is where we would make a run for, up again towards what, 182.5 to 183. That's only 4 points of upside, really, and doesn't mean it would have to stop there if it rallies, but that's our first upward objective, where it seems likely the sellers would come in, and defend the primary downtrend. Semiconductors, now we've got NVIDIA reporting after the close, and that'll have a big effect on this and the rest of the market, obviously. The volume weighted average price off of the 2020 peak is where these buyers have, been defending the market recently. That's that red line, and not perfectly. It never is. Well, I mean, sometimes it is, but generally, you don't expect them to be perfect levels to do business, but more levels of interest to observe on shorter term timeframes. And we still have, same thing. We've got the volume weighted average price off of this peak. Let's change that color to red so it just shows up a little bit better. That's our potential resistance. That's where we've seen, sellers have emerged previously. The 20-day moving average still declining, and we're still in a primary downtrend. Now, the good news on the intermediate term time frame is we're doing battle with the volume weighted average price from the beginning of this month. That has kind of flattened out. The 5-day moving average has flattened out. So again, maybe we get a little reactive sell-off, and then perhaps it rallies. That would be the best case scenario. Otherwise, if we see NVIDIA report earnings and this, the semis gap up to here, the best you could hope for is a pullback and then, buy some strength with a stop below the low of the day. That's the potential for bullishness. Don't forget we're in a primary downtrend. Biotechs still, looking like they're possibly on the edge of another sell-off. We have this prior support in here, which has become resistance recently. That's also where we see the volume weighted average price off of this recent peak. The 20-day moving average is declining over to a 30-minute time frame. The bullishness is found that we're holding above the month-to-date volume weighted average price, which is also the volume weighted average price off of the low that it made. And you can see that level seems to be being defended. So if you were to be bullish this market, it's very clear that a stop would go below this level. That is now further important because, well, one, it's a higher low, and it takes on further significance because it's the month-to-date volume-weighted average price and the volume-weighted average price from that low. So any emerging strength that might appear is coming in here. Ideally, we pull back and do the same thing, then get back above the week-to-date volume-weighted average price and continue to try to rally up towards that prior band of support in here. And maybe it offers resistance. It's most likely it will, but maybe it ramps right up there through the 50-day moving average. Nobody knows. What we need to do is find a way to get involved in low risk trades, maybe such as it, but again, never buying weakness, but buying strength after weakness with a stop under the most recent relevant higher low. That would be this low. So if you were to buy here with a stop below that level, see how it behaves at that volume weighted average price for the week. See how it behaves at the month today. I'm sorry, it's beyond the month to date volume weighted average price, but see how it behaves at these prior highs and raise your stops accordingly to what the market says. The financial stocks are also, right up against that volume weighted average price off of the April high. Let's color this one red as well, just so it's easier to identify here on the chart with a declining 20-day moving average. It's had a decent little rally recently. This is what I had sketched in last night as a potential scenario. So again, I sketched these scenarios out each night for subscribers to give you an idea of a possible scenario. What we want to do is understand that's just one way the market might trade. And I was hoping that we would see a pullback down to the 5-day moving average. Instead, the buyers stepped up, of course, after the Federal Reserve minutes, and that's where again we could anchor a volume weighted average price right there. And you can see it took a little bit of time for the buyers to regain control, but they did. And if you are long the financials, I would say a stop would go underneath today's low. Energy names continue to ramp higher here. They just are on this runaway uptrend. Don't repeat the mistakes that you made in technology stocks. Have a plan to exit these when the momentum ends and these things roll over, because they will, just like every single stock does.